Hello traders, I hope you have a profitable week. This video will consist in two parts. On the first one we are going to explain step by step how to choose the high probability zone. And on the second part we are going to combine different concepts with our strategy. We have here British pound versus Japanese yen, 4-hour time frame. Have you ever been confused on which supply or demand zone to choose after you have highlighted various of them? We are highlighting the supply zones that drove the bearish trend. And there we have the last supply with a strong bearish drop. This is a rally, base, drop, supply type. We are highlighting a last lower low level and waiting for price to break below it. During this sharp move price has created imbalance zones. We are highlighting the most significant ones. Price will visit sooner or later in order to fill them and balance the price. We are going to shift on 1-hour time frame in order to define the supply and imbalance zones. We start by adjusting the imbalance zones. As a result of that, now we have 3 imbalances instead of 2. This will help us in defining the right entry level. We are highlighting a supply zone that is located above the first imbalance. We are not going to stop on this time frame, but we are going to shift even lower as 15 minutes time frame. We have here a drop, base, drop, supply zone that is located between 2 imbalances on the top. We have a lot of zones, and if you are a beginner in supply and demand trading, you probably are going to be confused. You just need to wait for imbalance zones to be filled. In this chart we have 3 zones, and we need to locate our entry at least above 2 of them. This is why we choose that supply zone for our sell entry. In trading we are not 100% right, but we try to find high probability entry zone that allows us to put a reasonable stop loss and take profit level. In this example, being aware of other important zones above and below it, we don't recommend a tight stop loss because doesn't make sense to lower the probability of a trade. Price continued to compress in downside direction and then started to pull back towards our zones. The first imbalance filled and price touched the first supply zone. This level could offer us a short-term sell opportunity, but we preferred to stay stoic to the initial scenario and wait for the touch of second supply zone. Price made a small drop and then continue in upside direction, starting fill in this way the second imbalance zone. Price was close to our entry level but didn't touch it and dropped in downside direction. Our entry level remains the same. Eventually, price made another push in upside and finally touched and filled all supply zone. We had 2 options here, to enter right away or wait for rejection and enter at last supply. I choose the second option because the bullish candle which touched the supply was too strong and I was questioning the sell entry at this moment. This is why I waited for a rejection and put a sell limit order at fresh supply zone. We used an imbalance zone below as a target. As we can see, price pullback and triggered the sell entry and then dropped smoothly towards the target in a corrective way. This part of the video we are going to combine different concept with our strategy. As we told you in the beginning of this video, price developed and shows to us a textbook Elliott wave with 5 legs that was very hard not to be noticed even though we don't use it on our strategy. In simple way, after the 5-leg impulse price make an ABC correction. Now let's use our strategy to find more correlations, because without our system confirmations we do not enter any trade. This correction is the same with our AB equals CD pattern that we use very often on our strategy. Using the trend base fib extension we noticed that price has completed the pattern perfectly. When we highlight the session volume profile indicator, we noticed that the D level correlate with a fresh point of control. Till now, based on our strategy, we have 2 confirmations. The AB equals CD pattern and the touch of the fresh point of control. Let's hide the volume profile indicator in order to have a cleaner chart. We shifted on lower time frame as we always do. We need a bearish sign before entering a sell trade. And what we do in this case? We wait for break of last higher low and enter at pullback, usually at freshly created supply zone. Price dropped sharply and broke the higher low level. During this drop, price created a supply zone near the top, reasonable location to place the sell entry. Price consolidated for a while and pulled back towards supply zone. After reaching the zone, price started to consolidate, and our intuition told us to wait, because price could make a fake out in order to liquidate the majority of retail traders. This is not a rare event. You have to listen to your intuition only if you have a long time trading the market, because it's something that doesn't create it in a day, week or month. Price made a fake out as we expected. I personally missed the first pullback after the fake out and entered on the second one. Price made another fake out of the consolidation and dropped sharply in downside direction. We managed to close the trade at 50% of the potential target. After a strong impulse, price pullback most of the time, and we didn't want to lose the profits that we have gained. We made the right decision because price pulled back several times to entry level. This could cause the close of the trade at break even without any gains. Thanks for watching the video till the end. See you to the next one.